This is our projection oscillator swing chart. We use it as our primary chart to formulate our swing trading strategy. Now, this chart is unique and very useful in that it puts swing trading in context. It can tell you what kind of holding periods to expect with the ticker that you're trading, and what kind of price moves to expect in that holding period. Which is essential information to develop a trading strategy that's based on realistic expectations and with clearly defined risk parameters. I'll start off by first explaining what you see on the chart. And this is a daily chart of the SPY using standard candles. The top panel has two indicators. One is the momentum ribbon, which you use to determine the immediate trend, and the other represented by the arrows, the down arrows and the up arrows, is the true strength index. And if you're a stock charts user, it has a signature very similar to the PMO, but is a bar or two more responsive. In the first indicator panel, this is an 8-period unbalanced stochastic RSI, and it's unbalanced because the RSI period is 8 and the stochastic period is 5. And this is our primary timing tool, or setup tool, I should say. That's probably a better way to put it. Now, what you're looking at is an 8-period stochastic RSI, but these colored in red areas on the top and green areas on the bottom are a 13-period stochastic RSI that is in an oversold zone represented by green, or overbought represented by red. And as far as the 8-period stochastic RSI, which is the one you see, the orange colored line is the signal line, and the black line that occasionally turns green is the fast line. And it's normally black, but when it's green, that indicates that the 13 period, which you do not see on the chart, is going in the same direction. And the bottom indicator panel is the projection oscillator, which is mathematically similar to a regular stochastic, except that just using the period's high-lows, we use a linear regression of the high-lows, and it's slightly more responsive than the a regular stochastic. And we use that projection oscillator for a confirmation of what's happening with the 8-period stochastic. Now, what the 8-period stochastic tells you is, number one, that you're either in an overbought or an oversold zone and coming out of it. And we use that to set up our swing trades. But one of the first things we said was, what kind of holding periods can you expect? And we can take a look at that by measuring what kind of time periods we see when the stochastic RSI, say, comes out of an overbought into an oversold, back to an overbought, into an oversold, etc. And if we click on the C over here, this will let us put some numbers on the chart. So we came out of an overbought, moved into an oversold, and we'll look for the lowest period in there. Then we'll look for the next overbought area, the high. We'll look for the next oversold, and you can see that in this very strong trend there really was no low. So we'll mark this same bar as the low. We look for our next signal coming out, and this is the next bullish indication on the STO RSI. We'll look for the highest bar at the top. We'll go back to the next oversold. And okay, well, that's sufficient. And we can see that on the downtrend we had 2 days up, 11 days up, basically no days down, 9 days up. And if we move over a little further from here, we'll just go from say this high to this low to this high, and we had 8 days down and 7 days up. So that gives us some indication of what kind of holding periods we can expect to get out of the SPY during this period of time, and also what kind of price moves we had from the very top of the swing to the very bottom. And I think one of the hazards of swing trading is to develop unrealistic expectations about what you're going to get out of a swing. Now, nobody gets the maximum. This was 6.93 points available from the very bottom of this bar, and nobody gets all points, all 6.93. But if you can get 70 or 80% of it, then you're still going to be doing okay. But again, you can develop a trading strategy because you have a good handle on what to expect. But the basic way you use the stochastic RSI within 2 time periods, and there are 2 time periods that are primarily useful for the swing trader. One is the weekly time period, and we'll flip a weekly chart up, and it's set up the same way. And we can see that the weekly chart is on a TSI, True Trend Index, buy signal, bullish signal. The momentum ribbon is heading higher and expanding, or at least not contracting. So we can see right away that the trend, the longer term trend, is bullish. So we would want to orient ourselves to long trades on the daily chart. And we can see that the weekly chart is coming out of an oversold zone. We've had a bullish cross, which has not been confirmed with the projection oscillator. And we can see that because this fast line is black, that the 13 period is not yet in sync. So we may be getting a bullish reversal, but we don't have one yet. So even though the trend is bullish on the weekly chart, it's not in a position that we want to be optimistically bullish. And if we look at the daily 8 period, we can see that it's coming out of an oversold zone. We've had a signal cross on the 8, but again, the line is black, which means that we have not had the 13 period yet turning up to join the 8 to indicate that we can truly expect an upward push. And again, that's not being, the upward push or the potential for an upward push is not being confirmed by the projection oscillator. But another thing we can do is we're always interested in the range. So if we look at the last overbought zone and we click here, we can see that made a high at 236.52. And if we look at the last oversold zone, we get 231.61. So this is the swing trading range, and we have a pretty good handle on what to expect going forward for the longer term if either of these levels is penetrated. So we know the long-term trend is bullish. We're looking for bullish trades primarily, and we would know that if we can bounce through or get through the 236.52, that the bullish trend is continuing. And by the same token, because we've had lower lows and lower highs, that the daily trend at least has turned to the downside. So we're looking at the daily trend as a correction within the longer term trend and looking for a good opportunity to get long on the daily. But because of the conflicting signals we're getting, we know that that's not yet the time. All right, this is a really quick overview of the projection oscillator and how you can use it to formulate a realistic swing trading strategy, and I hope you found this useful.